What used to be judgmental 20 years ago became like rule-based 15 years ago, became algorithmic about 10 years ago. But now it's in the plethora of data available, you need to consume all of it and you need to take a decision in microseconds or milliseconds. Financial services is a trust business. Go back to the 500 rupee note in your pocket is nothing but a paper. It becomes important because you have the trust that the Reserve Bank will pay. The day is not far away where agents will do transactions on behalf of humans, and that adds a completely different layer of capability both from a technology and trust paper.
The payment typically looks very frictionless, right? I mean, so it's very smooth, it's very fast, but obviously every transaction is some sort of risk decision matrix exists, right? But what does it take to scale for example, at the scale PayU operates, right? I mean, how do you do that? What's the magic sauce there?
So PayU actually...
India's payments industry is evolving at an extraordinary pace. Scale is massive, convenience is just instant, and trust has to be built in real time. Behind every seamless transaction lies a complex balance of risk, infrastructure, and customer experience. Today, I have with me a very special guest here to discuss this, someone who's been in the payments industry for a long time, and he's been shaping the business at this industry. His journey started from consulting to global banking, working in the US at Capital One, Standard Chartered, and now he's building something at scale at PayU. Hemang Dattani, thank you so much for being with us.
Thank you, Paritosh. Thank you for having me.
Great to have you. So I think, payments and credit in India are evolving so much faster, I think, than anywhere else in the world. From where you sit, what are some of the most fundamental shifts that you're seeing in this ecosystem?
So both in payments and credit, I think what is changing very, very rapidly is the data has just exploded underneath, right? What used to be judgmental 20 years ago became like rule-based 15 years ago, became algorithmic about 10 years ago. But now it's in the plethora of data available, you need to consume all of it and you need to take a decision in microseconds or milliseconds. I think that's been a fundamental change, and I think it's going to change even more as the digital economy grows throughout. It's creating billions and billions of data points. Right. And ideally use all of those data points to be able to make the right decisions. That means you need to have the right technology, you need to have the right AI systems, all of that needs to come together.
Right. And I think you're probably also referring to a lot of the alternate data that's now starting to show up and creep into our conversations because, like you said, it's being digital means everyone has a footprint. And
Yes.
That footprint is what people are now starting to look at and say, hey, can I tell something about this individual before I lend to them? And that's been a big shift, I think.
Absolutely. So because if you think about it, like you said, digital data is everywhere. Right. I'll give an example. You're traveling from point A to point B, and you, let's say, take a taxi every day to go to work. In lending, you think about stability of a person's location. Has the person stayed in the same address for a long period of time? In the olden days, you would have gone, you would have visited the person's house, you would have probably talked to neighbors and said, kitne saal reh raha hai yahan par? Right. And this is like it's not more than 20 years ago.
Right.
And now you can say, hey, if I actually had the travel data of this person and I can say, hey, he's traveling from point A to point B every day, 5 days a week, I can say this is his home and this is his workplace.
Right.
You established stability, you established residence, you established workplace location, so many things established. Right. A large question is obviously the consent architecture to be able to use all of this. It's still not prevalent very, very pervasively to be able to use all of this data today and all of this alternate data. But I think the system will evolve into creating a consent architecture to be able to use all of this over time.
Yeah, absolutely. And within India, with the DPDP Act now in play, of course, that's going to make it a little tougher. But I think, yes, like you said, the ecosystem will evolve. And I think it'll find its footing with all of this information. I want to talk a little about some of the decisions that are made when you do credit, right? So So it sort of feels like the lending decision judgment call, right? In some ways, you're saying based on some data, I make a judgment that there's a low risk and I lend to them. In practice, generally, how do you think about who to lend to and and how much? So how does that work?
So actually, I'll take a step back. I think lending decisions are really about what is the need and what is the right product for that customer. That's the first step. A lot of folks get it wrong at that step. If you're making 25,000 rupees a month and you are wanting to buy an iPhone, which is 60, 70,000, that's intuitively it tells you it's the wrong product for you, right? If you really wanted that, then the question is, then you need to be able to pay for that, 3,000 a month over 20 months. And is that the right product structure? Can you get to that product structure, right? So I think there's a lot of thinking that needs to go into what is the right product structure for what use case. Once that comes in, comes the second question of, can I make it judgmental versus can I make it automated? If I'm making it automated, then is it scorecard based? Is it rule based, etc. Right? Some of the better institutions, I think they get this mix right. Your Bajajes and HDFCs of the world, their reason they are there is they've got the product market fit right and the customer segments right, and they've embedded it with a lot of good data science and algorithms at the back end, right? And you need to be able to bring the two together. Now, there's a lot of new age fintechs, etc., which struggle to get this balance. Because this balance is between, is it tech first, is it fin first? In lending, at the end of the day, it is money first. And once you give money, the only thing that matters is you get your money back, right? That's when the lending cycle closes, right? And I think that comes with experience to be able to get that balance right.
Yeah, and I think it's interesting what you brought up about this whole concept of someone looking at the product first rather than just thinking, because I think typically the cycle that, especially a new fintech that's sort of out there, or NBFC that's just launching, I mean, typically they look at how do I get more customers? And so they forget whether that, I don't know, I don't want to say they forget, but I think it's easier to sometimes say, no, let's just get our numbers up rather than look at the product, the individual, and make sure it makes sense for them rather than just sort of inward looking, saying it makes sense for the business, so let's just lend. Let's just get the numbers up.
But in lending, at the end of the day, it's because I come from a banking background. So I start with a fiduciary responsibility. Where is my capital coming from? My capital is coming from primarily my depositors, because that's where my equity portion is there, right? And I have a fiduciary responsibility to make sure that I pay back to them. I have a responsibility, fiduciary and contractually, to pay back to my debtors where I'm borrowing lines from. Now, that has to be true 100 out of 100 times for a sustainable, ongoing institution. That means my credit decisions need to work in good times, they need to work in bad times, macro up, macro down. I need to be able to balance that. When you go with a growth-only mindset, very often you will find that it's good in good times, but it really sinks in bad times, right? Now, you may say, hey, I don't want to have once in 100 years a COVID type of event. I don't want to plan for that, but at least the remaining 99, I should be okay, which is fine. That's a risk appetite call of your company, right? But I think where a lot of people miss out is saying, can I actually, economic cycles come every 1, 5, 7 years. Your business model has to be sustainable to that.
Yeah, very, very fair point. Now traditionally, credit was built on some documented history of the individual. But now we're building it on transaction behavior, digital signals, and alternative data, as we talked about, right? So what does that shift fundamentally change in how we underwrite now?
So what it tells you with a lot of these alternate data is where I had blind spots on somebody, I can understand that far better, right? So if you didn't have a credit bureau history, you would know very little about the consumer.
Right.
But today, maybe based on the payments data, based on their other alternate data, based on banking data, I can draw some inferences about what the individual's lifestyle is, what the individual's spend is, what the individual's income is, what the individual's cash flow is. And you can start modeling some of that and taking decisions, right? Where we've seen alternate data to a large extent being used so far is where the credit bureau was thin. I think over time, as we talked about, more and more data becoming available, and once it gets consented for use, you will get to a place where alternate data is as powerful or in times more powerful, even when you have a thick bureau, right? Because your life is beyond what is in the bureau. Bureau to a large extent is, in some sense, it's lagged indicator, because it says what has been true in the past will continue being true in the future. So if I have paid loans for the last 10 years, it is very likely that I'm going to pay your loans in the next 2 years as well. And it also says that, hey, I probably have had income sources in the last 10 years, so I'll have income sources in the next 2 years as well. What alternate data can tell you is much more real time. Hey, I've downgraded my lifestyle.
Right.
It's a very lead indicator if I've downgraded my lifestyle for me to be able to say. I think some of this, it will add over and above the bureau as well.
Yeah, and I think that's an exciting space. I think it's trying to understand and make sense of it, like you said, and it's a great example of, if I downgraded my lifestyle, then is that telling me something already that, look,
Yes.
maybe there's an event that we don't know yet. I mean, I may have all the good intentions, but maybe there's some factors outside of my control, which means I may not be able to pay back. That's very interesting. Now, you've obviously, as you mentioned, operated inside banks. So you come maybe from that bank first, more responsibility kind of and so typically in banks, risks, slightly longer cycles for decision making, right? But when in the payment space now, it has to be seconds. It's just instant. So how does that compression change the nature of risk itself? Is it any different?
Actually, I'll just probably comment on the question there. I'm not sure that's true. You look at any of the larger banks today, I think their risk frameworks are as evolved. They have the best of tools, they have the best of data science teams. What was true maybe 15 years ago, where banks were slower and fintechs payments were faster, I think that gap has narrowed significantly. At least in the large private sector banks, the more advanced public sector banks as well. Where it comes in, the difference between payments versus lending is, it's in that instance of the transaction. You have to make sure if it's a secure transaction or not, right? And I think the challenge is not as much about banks versus payments companies. It's the diversified information which is available, but it's available in different pockets. For example, a credit card issuer has all the historical transactions of the consumer to whom the card has been issued. An acquiring bank or an acquiring payment aggregator, online or offline, will have all the information on that particular merchant, but for only the transactions that it sees.
Right.
The merchant will have everything on that consumer which it sees on that consumer, right? So you've got 3 different data sources which don't talk to each other, which does not allow for very, very effective fraud risk management decisions.
Okay.
So the challenge is, you have to take decisions in microseconds, but you don't have a 360-degree view of the transaction and the consumer at that point in time. And this is an industry problem. There's obviously a lot of conversation going on with the regulators, with industry bodies, to be able to bring all of this together. But it requires a framework to be able to reduce fraud in the ecosystem.
Fair. And again, building on that a little bit, the payment typically looks very frictionless, right? I mean, so it's very smooth, it's very fast, but obviously every transaction is some sort of risk decision matrix exists, right? But what does it take to scale for example, at the scale PayU operates, right? I mean, how do you do that? What's the magic sauce there? What do people do?
So PayU actually has multiple entities, as you know. We work within banks for UPI switches. We work within banks for access control servers, authentication servers. We work with merchants for payment aggregation, and each of them process thousands of transactions per second. And a large part of that is, there is one is the technology infrastructure to be able to process at that scale. When you have a sale day event, when you have an IPL match where everyone wants to order food exactly at the same time, right? Or when the 12 o'clock midnight sale happens, you need to be able to process transactions at scale. So I think a large part of it is the technology capability to be able to process at scale. There is also a question about availability, right? Do you have the right redundancies? Do you have active backups? Can you actually be able to cut over in case of any downtimes, etc. Right? And then there is for each transaction, what is the latency of that transaction? And we talked about the fraud part about it. Is that transaction secure or not? So all of this needs to actually come together, which is where it lands up being a very, very deep technology and AI or data science play to be able to bring it together at scale.
Yeah, and I think, like you rightly said, I mean, at that speed and at that scale, it's a little mind-boggling what all needs to happen for it to actually operate in that instant that I say, okay, purchase, done. And I think we don't realize what's in the back end that's actually powering a lot of this. To build on that a little bit also, is there one piece that today you think in terms of the infrastructure in the ecosystem generally that's missing? You think that maybe that will be the next sort of, it'll push that growth if that infrastructure was in place?
So I already talked about the availability of data across entities. I think that is one big piece which is there. The second piece which is there, I think, is it's a solved problem, but I think today a lot of digital adoption is very, very massive in tier 1, decent in tier 2, but as tier 3, tier 4, tier 5 India starts using digital much, much more, you're going to see an explosion of the usage and the bandwidth which is going to be required. You have issues like even today, you'll see your Wi-Fi connections go weak at points in time. You will have zones where your 4G or 5G will not work. And I think those things need to be solved at an infra level for true adoption, 24/7, 365, all the places, right? And obviously the system will get there. Right. But I think the underlying network availability throughout India in all PIN codes, 365 days, I think that's something which will see a lot of evolution.
And in that, when you say, like, for example, tier 1, tier 2, maybe, like you said, mostly a solved problem in some sense. But as you move to tier 3, tier 4, does something change in the way you segment and you figure out? Because I think, one, they're just coming to the digital sort of side of things. But then I think the general demographic is also very different. So is there some thought on how do we sort of look at that? Is it different, or do you evolve your models? What happens there?
So obviously the demographic differs and you need to model differently. I think I wouldn't say as much tier 1, tier 2, but there is increasing language proliferation. Yes. We talk in all 26 languages of India versus just English. I think that's been a very good change that's happening in the ecosystem today. The other piece which works with differently from tier 3, tier 4 is you need to start tweaking your infrastructure settings accordingly, right? For example, do I allow the latency or the retry mechanism to be different, where the network connections may not be as good, right? The other pieces which you'll end up doing is there a way to create payments which will end up being frictionless, wherein where if literacy is not as much, and again, I'm not differentiating as much tier 3, tier 4 versus tier 1, but where literacy of the end consumer may not be as much. How do I help build trust with the end consumer? Can I avoid the OTP phishing frauds? Can I move to a biometric system or Face ID or a thumbprint impression, etc., right? Which just removes some of the friction, but it increases trust in the ecosystem, right? Because you don't have the scenario of an OTP coming and somebody giving. You avoid the OTP to begin with. Right. You make the transaction far more secure.
Yeah, and I think we've been seeing sort of conversations around even using your voice to do transactions, and so I think maybe those are the technologies that eventually will have to be built as well. It's one is the fraud angle, but it's also the ease of doing the transaction itself. Can I just voice or SMS and then just money just transferred?
I think that's step one, but it's very quickly we're going to go to step two, where agents start taking decisions on your behalf. And I need to go to Delhi tomorrow, and I have to just say, hey, book my travel for Delhi, and then right from does the ecosystem trust this agent, and how does trust get built onto this agent, and if the agent is taking an action on my behalf, how liable am I for that action, and if a chargeback happens, then what are the rights, etc., what are the processes, but the ecosystem, we've not got all the answers to it, but I think we will get there pretty soon, right? Because the day is not far away where agents will do transactions on behalf of humans, and that adds a completely different layer of capability, both from a technology and trust paper.
Absolutely. This conversation, I want to turn towards trust. I think you mentioned there is trust in all of this. What does actually build that trust between the lender, merchant, and the customer? Like, what's that thing that builds trust, and how do companies get it right?
I think the first piece, which is what folks need to reiterate, is financial services is a trust business. Go back to the 500 rupee note in your pocket is nothing but a paper. It becomes important because you have the trust that the Reserve Bank will pay, and it means something. So at a very, very fundamental level, it's important to say that, hey, there's trust. Now, where does that trust means? It means that 100% of times when A entity says X will happen, it will always happen, right? So between a payment, when a merchant, for example, gets a authorization success or a successful transaction, the merchant is going to go ahead and ship the goods to the consumer. They're out of inventory. They're going to get money through the settlement cycle maybe after 1 or 2 days. That's based on trust. If they don't get that, this entire digital e-commerce ecosystem breaks down, right? In the lending scenario, if there is a transaction, if there is a loan which has been given in a lending scenario, right? And then the consumer is repaying the loan, right? And he says, I'm paying the loan via this ABC, I paid by UPI, and my loan will get knocked off. There's almost implicit trust that it's happening. There is trust that when an e-natch mandate is supposed to go, it will go and it will happen. If that fails, you can see what happens. Actually, at a more fundamental level, there's trust for you and me saying there's money in my bank account, it's going to remain there tomorrow. If there's a large cyber attack, and there's a lot of conversation about it today, of vulnerabilities in the system, it's based on trust. Where does trust go? If you said, hey, the money which is there in your account is not secure because there are vulnerabilities, all of us would be panicking, right? So trust is so fundamental, right from the old, where I started with saying, hey, the government or Reserve Bank guaranteeing the tender, to a merchant accepting a success message, to a consumer paying back a loan, to us keeping money in a bank from a liability perspective relationship, it's all built on trust.
Yeah. And I think, at the end of the day, I think it's how you signal also trust to the end consumer, because at the end of the day, that's your sort of buyer of your services in some way. And the signaling of that is very important. And I think sometimes some folks get it really right. And I think some folks maybe sometimes miss that story of, signaling is not, like you said, it's also comes down to just basic customer service. Like, how do you service that customer when there is a problem? Do you do the right things? Do you stand by the customer in their time of need and pain? Absolutely. Because, right, I think those all signal, and that's when you become sort of like, that's the company I want to work with, because no worries, no questions asked, they will help me.
Yeah, absolutely. And that's how reputations are built, right? Which is, there is a reason why some banks have far richer reputations. They get all those micro instances. Not only have they got the infrastructure, the financial model, the systems, the technology, etc., right? But they, exactly what you said, in moments that matter, they come up strong and say,
yeah, we'll do right
by the consumer.
Absolutely. Is there, and I think this we sort of touched upon this a little bit, with the banks and the payments at the scale that they operate at, big scale, is there a fundamental difference in how they approach the trust in the customer experience between banks and fintechs and NBFCs maybe? Or you think it's now got to a point where it's very similar?
I think it's got to a point where it's similar. There may be differences because the risk appetite calls of banks versus NBFCs or fintechs may be different, but that's more risk appetite. Right. But capability-wise and I think they're
at par now. Yeah, I think that's also something we are saying, because I think again, I don't know if it's shifting, and maybe I'd love to hear your point on this. But I feel like there was a point where it was like, you only trust banks, right? I mean, that's the only place your money is safe and all of that. Then we had the shift where everyone's like, yeah, there's all of these wonderful NBFCs, fintechs that have come up and payment companies, and I can trust them. And I think with all the now frauds happening, now it's also, I don't know if there's a sudden shift going, hold on, wait, is it because it's happening because it's digital, or maybe they're not as, strong in their security systems as banks? Or do you think that's not really a problem in the industry?
I think it's across the board. So when a fraud happens, it's going through fintechs, digital companies. It's going, at the end of the day, it's going through banks as well. Because when it debits or credits your account, it's still a bank account at the end of the day. The bank is still seeing every transaction, and the bank has the ability to decline a transaction, right? And the same transaction flows through government switches as well. So it's not that when a fraud's happening, it's touching actually all parts of the ecosystem, right? When the fraud happens, what you do to make up to the customer or what you do to fix, I think those are places where some players may differentiate from the other players. But I don't think it's a question of saying, hey, because it's processed by X or processed by Y, there is more fraud, right? Everyone's struggling today.
Yeah. And I think I was coming more from the point of, I think because as end consumers, sometimes I don't think they understand the full ecosystem. Yeah. They only see the person, that one face. And so that's where my question was coming from, because they only tend to see these sort of new age companies, if you can call them in some sense, which are, 10 years old, 15 years old. Yeah. Does that become sort of a little bit of a pause saying, because all of us are using them, right? And we don't realize that, like you rightly said, there's an ecosystem that gets affected. It's just, I have one face and that's who I work with.
At least I have not seen that, because I think the most prevalent one is UPI, and you've got your large ones, PhonePe, Google Pay, Paytm, etc. But I think most individuals, if you talk to them, they'll clearly say, hey, this is the link to my bank account. You're at X bank or Y bank, right? They understand that it is both the front-end facing consumer app as well as the back-end bank account, which are both impacted. I have not actually come across a lot of cases where you say, hey, this is because of X and not Y. Fair. They may not understand how the money flow happens and what is involved, but at a very intuitive level, they know that at the end of the day, this is my bank at the back end. Yeah.
So whatever I have is where... That's how also they know to protect it and put limits on it, right? In this sort of all this complexity and fast-moving technology changes, AI coming in very heavily now. How are payment companies going to thrive sort of going forward, right? What needs to change for them? How do they need to start thinking?
So I think few things which will happen in the payment ecosystem. Payments ecosystem will move beyond just processing of payments to enabling commerce. Enabling commerce means it's bringing lending integrated with payments for the ecosystem, both at the point of sale. That's number one. The second piece which will happen is how can we provide additional value-added services? It could be around trust, it could be around abuse, it could be around risk management to the ecosystem. It could be around additional insights in terms of what do I know about your consumer? How can I help you go deepen with your consumer with better intelligence and insights? I think a lot of this will evolve And it's true across the globe as well. We've seen across the globe where you're saying, hey, payment is just one part of a service to the end merchant and consumer. You expand it to a multi-product relationship. Because I think the end goal is to be able to say how much more can we digitize, how much can we grow commerce. Payments is a mechanism. The end goal is growing commerce.
Right.
And I think payment companies will increasingly start focusing on helping grow commerce versus just processing the payment. There is obviously the questions, all the basic things, which is as volumes grow, how do you manage scale, how do you manage fraud? All of those will always be, those are P0 focus areas.
Right, fair. Now, talking about you personally, you built multiple businesses within the PayU ecosystem. The question becomes, what is that filtering mechanism that in your mind you go, yeah, this is something worth building and sort of going down the path of, and something that you're like, well, no, this is not for us?
You learn through experience, first of all. You have to build a few things which don't work to be able to understand what is worthwhile pursuing. But my learnings from all of those failures is a few things. One is there a real customer pain point? Being able to identify what is the customer pain point. It's not a feature, it has to be a product. It's a true pain point that you're trying to solve. That's part number one. Part number two is my right to win and my right to play. Means there may be pain points, but what makes me uniquely positioned to be able to solve for that? That's the second piece. And especially in the fintech space, I think there is learning that there is always some area of regulatory arbitrage. And I think people have learned it the hard way to say, hey, it is where we started with. It's at the end of the day, you're working with money. There isn't anything called regulatory arbitrage. There's a right way of doing this and there's not a right way of doing it, right? And being able to say that, hey, we are going to build a business model on the right way. It will take harder, it will be more difficult, but it's going to be more sustainable.
Right. Yeah, that's very, very interesting. I think, like you said, the right to play is something sometimes maybe gets missed because, people identify pain points. Oh, this is a great pain point, we'll just play. And then you forget that, well, am I, first of all, in the right space to have the right sort of technology set up and maybe the business model set up to be able to even play in this space? One last question. I think if you were starting out again in some ways, is there, and with all this experience you have, is there something that you think you want to build in the fintech ecosystem and that you think like, yeah, this is an interesting play to do?
That's if I had the idea, I would be somewhere else. But I think there are a few places where, like I said earlier, right, helping merchants digitize rapidly, helping digital commerce. I think that's a genuine pain point, especially for small businesses, right? And actually, with Gen AI, it's going to make it easier for the smaller players to have a even keel to compete with some of the larger ones, right? You have all the tools, you have a ability to do things on yourself. You don't need the best data scientist and the best technology person on your team, right? And we've seen one-person company, two-people companies, etc. So I think there is a question of how do you really be able to work with that entire large segment of SMBs. I think it's an opportunity, and we'll see a lot of that come through.
Fantastic. Well, thank you so much. I really appreciate your time. I think this has been quite insightful and quite interesting to see your take, especially, like I said, for us, it was interesting that coming from banking now into this new age world, if you may. But again, to your point, I think banks are also catching up and they're now pretty much at par in most things. I think personally, if you were to ask me, I think that there's ways to go a little bit around the customer experience. But besides that, I think systems-wise, infrastructure-wise, I think they're all at par now.
Absolutely. That's my take at least. I mean, so I think, like, you look at the top 5 private sector banks, the top 2-3 public sector banks, the scale at which they operate, It's excellent. I think, yes, customer experience could be at places. Yeah, it could be better, but there are plenty of other things to get right.
Well, thank you so much, Hemant. Really appreciate it. Sorry, Hemang. And I think for folks that will probably listen in, I think there's some lessons to take in terms of how they look at their business. So really appreciate it. Thank you.
Thank you. Thank you for having me.
Yeah, absolutely. Pleasure.